Welcome back to the Dorian Finance Podcast. If you're new to my podcast, it's about finance, business, and much more. I'm Dorian. Let's get started right by you following my podcast and leaving a review of this podcast. It's not what you do that makes you rich, but how you do it that makes you rich. Every achievement begins with the decision to do it. Ignorance destroys so many opportunities that come to our lives every day. Motivation's overrated. Discipline and accountability are what matters. Now for the trading week, it's mostly led by technology, big businesses, and the most traded right now is Microsoft, Intel, Nvidia. Historically, September is a slow and low month for the market. However, it's basically a good buying opportunity for stocks for the next quarter. So if you look at your stocks and look at stocks that do very well during Christmas and the last quarter of the year, this is a perfect opportunity to buy them, in my opinion. First topic is what will happen in the stock market if Trump wins the presidency, and what would happen to the stock market if Harris wins the presidency. And this discussion, I have actually made quite a few episodes on this with Biden versus Trump. So you can go back and listen to quite a few different podcasts which kind of relate to this. However, I do see Harris as being different than Biden, but it's also she's still a Democrat. She still follows quite a bit of the same beliefs and policies that President Biden did. And also, she's still the VP. So I'm going to try to avoid using President, VP, or former president in this because I was listening to quite a few of my old podcasts and I kept on repeating that every time I mentioned President Trump or President Biden. So I'm going to avoid even using that title even for even for President Biden or VP Harris in this discussion. We have a unique experience because we saw what Trump did in his first term. And even though Harris is the VP, you can still argue she did do quite a bit. And I've listened to many of their campaign promises. Yes, all politicians, even Trump, do make a lot of campaign promises that they can't implement. However, there are three main policies that both of them has made that will affect the stock market in different ways. And I'm going to start with Trump. His campaign promises are tax cuts, deregulation, and infrastructure investments. Number one, tax cuts, which is historically a Republican value, which is less government, less regulations. And what that will do is basically big business, it will artificially increase their income because they don't have to pay as much taxes. The theory behind that is if you have a company that is worldwide, globally, they have parts of their company that generate money, let's say Apple, outside the United States, and the United States doesn't even get touched that income at all. However, if they want to bring it into the country, the US will tax it. And that was the theory first term with Trump of, okay, let's lower it so then Apple will bring in the money. So even if it was 1%, which is too low, but let's use that example. 1% of something is better than 35% of nothing. And then deregulation, that to me can be a double-edged sword. I've listened to podcasts that talk about regulation of like elevators, where if you don't double check the elevator every year, then elevators fall and people die, versus the idea of over-regulation of, checking it 6 times every year is a little too much. So deregulation, that's a double-edged sword in my opinion. And infrastructure investment, that's a pro of any policy, that goes beyond just the normal party, because we need to fix our roads. We need to make sure our infrastructure is good. So that is a policy which both candidates have made, because I've heard Trump say a little bit more than Harris. And then Harris's policies that I've listened to her rallies, she only talks for a little bit or changes her voice. That I don't mind. Her main policy that will probably make her unable to win the election is the promise of increasing taxes. Hillary Clinton, going back to her campaign, promised to increase taxes. That, I would say, was the thing that put the nail in the coffin for her. No one likes increasing taxes. And yes, the idea of taxing the rich, no matter how they do it, it always hits the middle class and the poor as well. One that's different than Trump is more regulations. That's, to me, it's a fine line, because there's some areas that need to be more regulated than others, especially when it to do with the human body. But then it's also, if there's too much regulation, then it becomes more of a hindrance to small business, because small business will have to deal with more regulation. The last one, which this should not be single party issue, it should be both parties should think of this, but it's also, is it feasible, is it logical to do, which is clean energy initiative. We use oil, gas, because it's easier and cheaper to do as energy. Right now, even electric cars, a lot of them have a battery that will die within 2 to 3 years, or depending on the type of battery that they use. And it also costs so much to build that battery, it becomes a net negative or just a net neutral when it comes to it. And then we also still, our power grid is not solar, it's not wind, and that needs to change. But the cost of doing solar or wind and then the maintenance of it is still net negative. So there needs to be a innovation of lowering the cost of these situations and making it so that the consumer or government makes it that it makes sense to do. Like, for example, many of the rent-a-car places has dumped Teslas to the market because they know that the Tesla battery to replace it is not feasible for their rent-a-car business. But moving back to Trump and Harris, the stocks that will benefit if Trump wins will be defense, because he did raise the military, and then oil and gas with deregulation, and also that Trump has already promised on day one to start drilling again, which is proving to the people to lower gas. And you can argue, how does a president lower gas or increase gas? The United States globally actually produces almost a quarter of the gas and oil. And you can look at that. Some people will argue more, some people will argue less. But if you look back to it, the Exxon pipeline, which Trump approved and then Biden killed it, that is basically making supply and demand where the supply of it decrease. So that will increase the price of it. Another sector that would get a boost, which would be from the deregulation from Trump's policies, would be the pharmaceutical industry because of the deregulation. And then the US banks and crypto too. We can have a 2008 again if there's too little regulations. And really, that's a double-edged sword. And then US technology companies. Those are the main 5 sectors that will increase during Trump's presidency. Many different websites have already proven or posted, oh, if Trump wins, the stock market will have a boom. Harris, they're still kind of neutral towards it. They don't want to post whether it's going to be a boom or a bust type thing if Harris wins. Stock sectors will increase if Harris wins, just like Biden would be the green energy stocks. I would say, I haven't looked it up enough, but I would say she would also be for marijuana, which Trump also said he is, but that's a question mark in my mind. And then healthcare facilities might be booming with Harris, and then the stability infrastructure and also utilities, which those are all sectors. And also it's just how you look at it is any stock that does clean energy, if Harris is pumping in money from it, that whole sector will go up. Again, we have a unique opportunity that both Trump and Harris and Biden, you've seen what both of them can do. Yes, she's a VP, but it's still her term too. She's the first VP that they call the Biden-Harris administration instead of just the president's administration. But can you afford the same repeat of the Biden-Harris administration for another 4 years? Can you afford another Trump 4 years? What do you want to do? Do you want to have mean tweets and have gas being $1 cheaper? Do you want to have the gas being $1 more and no mean tweets? Or in my case, I just straight up blocked him and I didn't have to look at that anymore. And I enjoyed the $1 off on gas. It's just depends on what you want to do. Do you believe that climate change is real? Or do you believe that it's a way that the government has taken billions of dollars of your money and has not proven a result in many, many years? That could be a conspiracy, which I see as more of a conspiracy than anything else. And I do believe that there should be a balance of regulation and deregulation, and also the idea of efficiency in our government and also transparency in our government. And if you agree with me or disagree with me, keep it civil, keep it lighthearted. Show me your facts, show me your homework. I'm showing you mine in the description, and also follow me on TikTok where I do more videos, and on YouTube as well. The next topic is how stocks perform in election years. I will make another video on basically the lead up and also breaking down all 4 years as well, using both Trump and Biden-Harris administrations as performance-based analysis on there. But the stock market performs during election years are usually, to me, flatline. And that is based off of looking at Obama's election years, then you had Trump's election years, and then you have Biden's election year. This year has been unique that there has been more spikes up and down than anything else. And really, it's the market volatility of who's going to be the candidate that stands out, the pre-election jitters of that, which to me was kind of cut short because it was Biden, now it's Harris, and then Trump, which was he had to get to become the nominee. He had to go through it, which he didn't do the debates, which you can argue was not good, or it was, hey, he was already up in the polls that he knew he didn't need to be there. The post-election rally or correction, and a good example of that was with Trump and Clinton, where everyone thought Clinton was going to win and Trump won, and that's where you had both Home Depot and Lowe's rally almost 30% when he got the nomination. That was a surprise. But, for example, if you bought Home Depot and Lowe's 2 weeks before the election, you just made 30%, which is phenomenal. And also sector impact, depending on the candidates and what they're going to do to either regulate, add taxes, do some weird stuff, etc., or just be let's do business as usual for the United States. That is a factor that the stock market does impact when there's two candidates and when two candidates might win. For example, before Harris became the nomination, when Biden and Trump did their debate, Trump's company and Rumble and a few other, let's say, right-wing companies all rallied up because of Trump doing so well during the debate there. When Harris became the nominee, all those companies went back down. Those were corrections because of the market thinking one candidate was going to win the presidency before November. And there has been many cases that shows that the stock market tends to perform well in the year leading up to the debate. The thing that I noticed looking at Trump's year and then Biden's year and then this one, to me, it's advertisers all should be making a lot of money. Facebook or Meta, Google should be raking a lot of money because both candidates are spending a lot of money. Harris is outspending Trump, which I need to double check that, but that's what I keep on hearing via the news on Fox and CNN. That's money of getting people to be aware of Harris and also getting aware of Trump. And then it's really the economic wellness of the country of the year. Really, most election years, they try to make it flat. Kind of also like Olympics, for whatever reason, can correlate to being a level off year. you have to look at the employment rate and inflation rate, and also maybe it's just psychological that the citizens of the United States are seeing new hope, or okay, let's do business as usual. Let's not have mean tweets. Let's not have someone that can be painted as a clown in some pictures. It is, let's have someone be a role model for our country and someone who's strong enough to talk to dictators, talk to other world leaders in a private situation, not get bullied, and is able to negotiate and have a track record of negotiations versus just a seasoned politician that hasn't been tested. But those are different things, and let's see how it goes. If you disagree or agree with me on how the stock market is performing during election years, many people might be talking about the Clinton, Bush years. Those years, I haven't really looked into that very well. I see the market every single day. I look at the app and I look at stock reports and I can see how it's going. And this is the last topic, is how to invest in the stock market. And personally, I believe now is the best time to invest in the stock market. There's many different stockbrokers accounts that can allow you to trade, which is buying and selling stock without there being fees with doing that, which allows you to make more profit. And the biggest takeaways is investing in the stock market is meaning buying shares or ownership of a publicly traded company. You're becoming a partial owner in a company. If you buy Apple, Microsoft, Intel, Nvidia, all those companies, if you do that, you're a part owner in it. If a stock you own becomes more valuable, you could earn a profit when you decide to sell it to another investor. All happens automatically. It's not like you go to the supermarket and say, hey, do you want to buy my Apple stock? It happens. That's what the stockbrokers are there for. And if the stock you own becomes less valuable, let's talk Truth Social or the Trump stock, and you decide to sell it, no one's going to be buying it for a high price, and you would be selling at a loss, meaning you lost money. When you invest in a stock, you are hoping that the company grows and performs well over time. Many different investors, like Jim Cramer, says that hope should never be in your vocabulary when it comes to investing. And what he does is he looks at the performance of the company. Is it still the market leader? Is it have a history of many years of it going up or down? And if it's going down, why? And if it's going up, why as well? And that's really what you want to know, but the past doesn't equal the future. If that was the case, Blockbuster or cassette tapes would be the biggest industry right now when both of them are basically out of business. That's how you end up making money, is when a company grows and performs well. For beginners to learn how to invest in the stock market is putting your money in an online investment account, stock brokerage account, to purchase a stock, which we already talked about. And you don't have to have millions of dollars, thousands of dollars to open up an account. Most brokers allow you to open up without any money, but then once you want to trade, you need to link up your bank account. Then it becomes a process of, they sometimes are slow, sometimes are fast, but then there's more fees if you transfer quickly. I recommend doing paper trading, which is you're pretending to trade with whatever amount you want to do, and you do that, and it simulates the real stock market, and you do that. Some people recommend for a whole year. I recommend just doing it until you're comfortable with that, and you want to make sure that you're winning more than you're losing before you start making the real money trades. And also think of it as this, that people will go to college for 4, 8, 12 years and be spending money, losing money with the goal of making money. So maybe have that as your guiding post as well, that you take a portion of your paycheck that you're able to basically burn, throw away, that type of thing, where it won't be like your mortgage payment or your electric bill, something that you need to have that money for. Use that and invest in the stock market in various ways. And you're having that mindset of, I'm just learning right now, and even if I lose for 4, 8, 12 years, I'm still learning a new skill. The next is risk management, which is if you have a stock that you bought for $100 and it's performing poorly and now it's down to, let's say, $50, you lost half of your investment if you sell it. If not, you can keep it. Some investors will only buy stocks with dividend, so they can basically keep their stocks, their losers, forever and collect their dividends. That's just depending on your risk factor. There are hedge funds, professional banks, that if a stock goes down, let's say 5%, they sell it at that loss to protect themselves from, say, that company will go down further. Example of that in my own personal life was buying the stock General Electric, or GE, at $30 per share. And I bought quite a bit because I was like, okay, this is a market standard stock. It's a safe stock. It had 3% dividend. And then I got distracted with college and not really paying attention. And then it started making reports that other companies are eating its lunch. It's companies that they used to be the market leader in, they're not really the market leader in anymore, and their stock went down to $20 per share. I lost 1/3 of my initial investment. I was thinking to myself, okay, it has a 3% dividend, it's still a company, it's not going to go bankrupt. Should I keep it or should I sell it? At that point, I was looking at that and I was like, it would have to go up 50% just for it to break even for me. And at the time I was looking at it, I'm like, I'll probably just tax harvest it as well, which is you're getting a tax reduction off of your stocks that you just lost money on. And I was like, you know what, I'll do that. So then I have that money liquid to invest in different companies that went up. In my case, it was NVIDIA and also Tesla that I lucked out and bought into. In that example of GE, that company went down past $10 after I sold. So that was my risk management being a good factor because of it went down even lower. And set a budget for your stock market investments. And like I said, it's basically you are taking the money that you're able to set aside and not use for bills to invest in. And that will grow. It will be awesome to do, and you're focusing on investing for the long term, depending on your age. So I'm looking at buying a house and a few other things, but it's still a long-term idea that you're investing for when you're unable to work, that you're able to live off of your investments, and you're going to be managing your stock market portfolio. In the links, show notes, are two different sites that I use, Robinhood and Webull. And if you sign up for either one of those, you can get a free stock and you can start trading there too. But the bottom line is learning how to invest in the stock market will be challenging and can be challenging at every stage of the market. What other way is there to get rich? You can do real estate, you can become a high paid employee, but you have to create assets, buy assets, so you're not just doing paycheck, and that you're developing multiple streams of income. And follow my podcast for more ideas of personal finance, personal accountability, financial literacy, and many other topics as well. Please rate this if you're listening to it all the way to the end, 5 stars. That really helps me on Spotify. And also follow me on social media. Thank you very much for listening to the Dorian Finance Podcast.